Welcome back to London, and specifically to Lombard Street, which is one of the most historic and famous streets here in the city. At some point in time, many of the world's leading banks have actually been headquartered here, and now it's home to TJ Markets, and I've been chatting to Manoj Ladwa. On the lift on the way up, we had quite a gloomy chat. It seems at the moment you're pretty bearish on the markets.
Absolutely. I think with regards to the markets, financial markets, and certainly the equity markets, there seems to be a number of headwinds. Certainly the Greek situation, although it may have been approved by Parliament, with the standoff with regards to its next tranche of bailout money, that's certainly weighing on sentiment. Corporate earnings, even though analysts have lowballed expectations, those corporate earnings that we're seeing are coming in on the weaker side or relatively mixed, and even if they are positive, the outlook seems to be fairly bearish as well. And with regards to the fiscal cliff in the US, I think the markets are trying to price an increase in taxation and a decrease in public spending. And
let's just concentrate on the Greece situation at the moment. Do you have any anticipation that the whole situation can be resolved speedily?
I think it will be resolved fairly speedily. It's in the best interest of all parties for it to be resolved as soon as possible. And we've seen this in the past, whereby there's always been an element of brinksmanship when it comes to Greece being bailed out. So I believe it will be solved by the end of this week, and Greece won't be going bankrupt.
And what about the fiscal cliff? There does seem to be some conciliatory words from the US politicians, so there has been some progress there.
Absolutely. I think what we'll see is politicians making more and more moves in order to decrease the impact of the fiscal cliff. Unfortunately for equity markets, they tend to be fairly nervy, especially at the moment, and we could see accelerated moves to the downside before we start to see a rebound.
And what about the change in Chinese leadership? I'm sure you're not a Chinese politics expert, but this is a once-in-a-10-year event. Does that have any impact on the markets? It's
had a minor impact on the markets. I don't think it's something that the markets are factored in straight away, but it's very much a wait-and-see episode. It's similar to the change in leadership in the US administration as well. So I think the markets will watch and wait and see what happens from China.
So in these difficult times, what are you doing for your clients? Are you reducing their exposure to certain assets?
Absolutely. I think certain asset classes have had a very good run to the upside, and unfortunately it seems to be a lot of the defensive type of stocks, so the utility companies, the tobacco companies, the companies that are paying high yields, high amounts of dividends. These are the sectors that are starting to tail back off, and we're seeing some demand coming in for high beta stocks, but a growth stock, so for the banking sector and to a certain extent for the mining sector as well.
Is there a division between the two sides of the Atlantic? Because obviously the situation in the US, well, it's still quite shaky, but maybe more favourable than over here in Europe.
Absolutely. I think, especially with regards to the US, the economic numbers have been coming in a lot stronger than they have been in the UK or Europe. But nevertheless, with regards to the fiscal cliff, that's adding to a little bit of uncertainty. So you can see the gap between US equity markets and UK equity markets probably narrowing over coming months.
Manoj Ladwa clearly bearish on how things stand at the moment, and we'll continue to monitor the events which are shaping investor sentiment here on Dukascopy TV. But for now, goodbye.